Hello, I'm Jeffrey Ham, equity analyst for Briefing.com. Today is Wednesday, May 20th. An upbeat tone was supported by continuing gains among commodities and an early advance by financial stocks Wednesday. However, stocks began drifting lower midway through the session and ultimately closed with a loss as participants turned against financials. Early gains were helped along by investors that chased commodities and materials stocks, which have benefited from the assumption that stronger economic conditions in the back half of the year will ultimately rekindle commodity demand. A weaker dollar has also helped bolster commodity prices. The minutes from the April FOMC meeting indicated that participants project a contraction for real GDP this year, and that committee members believe the near-term economic outlook has weakened relative to the projections made in January. However, a recovery in sales and production is still expected to begin in the second half of this year. With the dollar dropping more than 1% against a basket of major foreign currencies, gold prices advanced 1.2% to settle pit trading at a 7-week high of $937.40 per ounce. Gold stocks like Newmont Mining provided leadership to the materials sector, which had spent most of the session trading with gains exceeding 2%. Oil prices built on the prior session's advance to register fresh 6-month intraday highs and closing highs. The advance was helped along by bullish inventory data. Crude contracts settled more than 3% higher, just above $62 per barrel. Financials proved to be a weak link during the session. The financial sector spiked to a near 3% gain in the early going, helping drive the broader market higher, but the move ultimately collapsed. Financial stocks closed the session with a 2.4% loss. Though Bank of America showed strength after announcing that it raised $13.5 billion through a previously announced share offering following government stress tests, banks were among the sector's weakest performers. The KBW Banking Index slid 2.8%. Consumer finance companies also showed considerable weakness amid continued concern that new rules are in order for credit card companies. Following the Senate's approval yesterday, the House of Representatives approved a bill imposing changes for the credit card industry. Retailers had a seesaw session, which saw the sector trade with a 3% gain before settling with a 1.6% loss. Despite the disappointing finish, Target still logged an impressive gain following better than expected earnings. Dow component Hewlett-Packard generated inline earnings for its latest quarter and issued an inline forecast for the current quarter. The company's upside outlook for fiscal 2009 wasn't enough to win it favor, though. The stock traded as a laggard among tech issues. I'm Jeffrey Ham for Briefing.com, and thanks for listening.